Have you ever felt the itch to invest in something? Stocks, crypto, real estate, or maybe even a friend's business idea? Only to realize much later that maybe, just maybe, it wasn't such a great idea after all? Don't worry, you're not alone. In this video, we're diving into the 12 most important things you must look out for before you invest a single kobo, dollar, naira, or even a coin. This is not your usual boring finance talk. No big words, no confusing graphs, just clear advice, real stories, and practical steps that could save your wallet from heartbreak. Let's dive in. First things first, why do you want to invest? Is it to grow your savings, retire early, buy a house? You need a clear reason, because when things get tough, and they often do, that reason will keep you going. Don't invest just because everyone else is doing it. That's how people end up in financial rehab. Every investment comes with risk. It's an inherent part of the process. Let me say that again. Every single one. From the most conservative bonds to the most speculative startups, risk is always a factor. Understanding this fundamental truth is the first step towards becoming a savvy investor. There's no such thing as 100% safe returns. Even keeping your money in a bank account carries the risk of inflation eroding its value over time. So, while some investments may appear safer than others, guarantees are simply non-existent. Before you invest, ask yourself a crucial question. What can I lose? Consider the downside. What's the worst-case scenario? If you can't afford to lose the money, if losing it would significantly impact your life, then don't invest it. Protect yourself first. Research is your superpower. It's the shield that protects you from making uninformed decisions. Learn about the business you're considering investing in. Read reviews from independent sources. Ask questions, lots of them. Check licenses and registrations to ensure legitimacy. Want to invest in a company? Dig into the details. Who runs it? What's their track record of success and failures? Is the company properly registered with the relevant authorities? Be like a detective, uncovering every clue. The more you know, the better equipped you are to make sound investment decisions. Knowledge empowers you to assess risk accurately and identify potential opportunities. Watch for red flags that scream scam. Guaranteed returns? That's a major warning sign. Too good to be true? It probably is. Just register 3 people and you'll be rich. Run away from pyramid schemes. If something feels off, if your intuition is sending you warning signals, it probably is. Trust your gut. Your instincts are often more accurate than you realize. And don't be rushed into making a decision. Pressure is a common tactic of fraudsters who want to exploit your fear of missing out. Imagine signing a contract without even bothering to read the fine print. Unfortunately, that's how many people approach investing. Research is your superpower, your defense against potential pitfalls. Learn everything you can about the business. Scour reviews from multiple sources. Ask probing questions. Verify licenses and registrations. Want to invest in a company? Scrutinize who runs it. What's their track record, both the successes and the failures? Is it registered with the appropriate regulatory bodies? Be like a detective meticulously piecing together a case. No, scratch that. Be even more thorough. Be like a jealous partner checking social media comments. Dig deep. The more you know, the better your decisions will be. There's a very good reason they say knowledge is power. And in the world of investing, it could very well be the power to protect your hard-earned money. There's unfortunately no shortage of scammers lurking in this world. Some wear expensive suits while others greet you with disarming smiles. So, what are the key red flags you should be actively watching for? Guaranteed returns? That's a flashing neon sign screaming danger. Too good to be true? If it sounds that way, it almost certainly is. Just register 3 people and you'll be rich? That's a classic pyramid scheme. You get the point. If something feels off, if your instincts are raising alarms, it probably is a scam. Trust your gut. And absolutely don't be rushed or pressured into making any decisions. Pressure is a common tactic employed by fraudsters to manipulate you. If they tell you that you need to pay today or you'll lose this incredible opportunity, walk away. Or better yet, run as fast as you can in the opposite direction. Don't put all your eggs in one basket. It's an age-old saying, and it rings especially true when it comes to investing. In investment terms, that means don't put all your money in one place. Diversification is key to protecting your wealth. Stocks, bonds, real estate, mutual funds, mix it up. Spread your investments across different asset classes. That's how you reduce risk and increase your chances of winning in the long run. Think of it as building a fortress. The more walls you have, the stronger it becomes. You don't have to start big to start investing. Many people think you need a fortune to begin, but that's simply not true. You can invest with 5,000 Naira, $10, or whatever little you have available. The important thing is to start. Don't wait till you have millions. Start where you are with what you have. Every great investor started somewhere, often with very little. Learn as you go. The investment world is constantly evolving, so continuous learning is crucial. When you invest can be just as important as what you invest in. Timing is everything. Don't buy high and sell low. That's a recipe for disaster. Understand the market cycle. Markets go up and markets go down. It's a natural part of the process. Sometimes it's better to wait for a dip before buying. Other times, it's better to jump in and ride the wave. Patience pays dividends. FOMO, or the fear of missing out, can make you broke if you make rash decisions. Ever heard the saying, "Don't put all your eggs in one basket"? It's a fundamental principle of risk management. In investment terms, that means don't put all your money in one place. One business goes down, you still have others keeping you afloat. Think of it like a food platter. If you only have Jollof rice and it turns out bland, you're doomed. But if you add plantain, salad, and meat, there's still hope for a satisfying meal. Stocks, bonds, real estate, mutual funds, mix it up. Diversify your portfolio. That's how you reduce risk and increase your chances of winning. You don't have to start big to start investing. You can invest with N5, 000, $10, or whatever little you have. The key is consistency. Don't wait till you have millions. Start where you are. Learn as you go. A small stream can become a river with enough time. Remember, it's not about how much you invest initially, but how consistently you do it over the long term. When you invest, it can be just as important as what you invest in. Market timing can significantly impact your returns. Don't buy high and sell low. That's like entering a party when everyone's leaving. You're likely to miss all the fun. Understand the market cycle. Recognize the patterns and trends. Sometimes it's better to wait for a correction before investing. Other times it's better to jump in and capitalize on momentum. Patience pays off in the long run. FOMO, fear of missing out, can make you broke if you let it cloud your judgment. Hidden fees are silent killers, lurking in the shadows of your investment portfolio. They erode your profits bit by bit, often unnoticed until it's too late. These fees can take many forms, from management expenses to transaction costs, and they can significantly impact your overall returns. Before you invest, arm yourself with knowledge and ask the crucial questions. What's the management fee? Are there any hidden withdrawal charges that might surprise me? What about taxes? How will they affect my bottom line? Understanding these costs upfront is essential for making informed investment decisions. It's not just about the gross returns you see advertised. It's about what you actually keep after all the fees and expenses have been deducted. Focus on the net return, the real profit that lands in your pocket. This is the true measure of your investment success. Don't be fooled by impressive-sounding numbers that don't reflect your actual gains. The market will relentlessly test your emotions. Fear, greed, panic. These are powerful forces that can cloud your judgment and lead to impulsive decisions. If these emotions drive your choices, your money is in serious danger. Remember, investing is a marathon, not a sprint. Stay calm, stay rational, and don't let short-term market fluctuations dictate your long-term strategy. Before you invest a single dollar, set clear rules and guidelines for yourself. Develop a well-defined investment plan that aligns with your financial goals and risk tolerance. Once you have a plan, stick to it. Don't let sensational headlines or the latest Twitter hype sway you from your chosen path. Discipline is key to successful investing. Take advantage of the tools and resources available to you. Use the apps to monitor your portfolio's performance. Use the spreadsheets to track your assets and liabilities. Explore the various platforms that can help you manage your investments more effectively. The more organized and informed you are, the better equipped you'll be to make sound financial decisions. From sophisticated investment trackers that provide real-time insights to automated robo-advisors that offer personalized investment recommendations, there's a wealth of help out there to guide you on your investment journey. Don't be afraid to explore these options and find the tools that best suit your needs and preferences. The financial world is a dynamic and ever-evolving landscape. To stay ahead of the curve, it's crucial to stay updated on the latest market trends, economic developments, and investment strategies. Follow reliable sources of financial information, such as reputable news websites, established financial newspapers, and respected market analysis reports. Continuous learning is essential for making informed investment decisions. The more you learn about investing, the more you empower yourself to make smart financial choices. The more you earn is a natural consequence of increased financial literacy. Invest in your knowledge by reading books, taking courses, and attending seminars. The returns on your investment in education will far outweigh the costs. Hidden fees are silent killers, slowly but surely eroding your investment gains. You might think you've made a profit of N50,000, but after all the hidden charges and expenses are factored in, you could be left with mere crumbs. Before you commit to any investment, be diligent and ask the tough questions. What's the management fee? Are there any unexpected withdrawal charges lurking in the fine print? What about taxes? How will they impact my overall return? Remember, it's not just about the potential returns, it's about what you actually get to keep after all the costs are accounted for. Let's take a look at some real-life examples of people who have navigated the world of investing, both successfully and unsuccessfully. Grace Beverly, for instance, started with a small fitness side hustle and reinvested her profits wisely. Today, her business empire is worth millions. She didn't fall for fleeting trends or chase short-term hype. Instead, she focused on building long-term value. Robert Herjavec, who started with virtually nothing, made early investments in the tech sector. His advice is simple but profound. The best investment is the one you understand. On the other hand, we have Mike from Abuja, who invested in cryptocurrency without doing his homework. He lost a staggering N2 million in a rug pull. His cautionary tale serves as a valuable lesson. If you don't understand it, don't invest in it. Learn from these stories. Success often leaves clues that you can follow, and failure provides valuable lessons that you can avoid. Let's delve deeper into the experiences of real individuals who have ventured into the world of investing, highlighting both their triumphs and their setbacks. Grace Beverly, a prime example of smart investing, transformed a modest fitness side hustle into a multi-million-dollar business empire through strategic reinvestment. Her success stemmed from a focus on long-term value creation rather than chasing fleeting trends. Robert Herjavec, a self-made entrepreneur, attributes his success to early investments in the technology sector. His guiding principle is simple yet powerful. The best investment is the one you understand. In contrast, consider the story of Mike from Abuja, who unfortunately learned a harsh lesson about the importance of due diligence. He invested in a cryptocurrency without proper research and subsequently lost 2 million naira in a rug pull. His experience underscores a critical point. If you don't get it, don't invest in it. By studying these diverse experiences, we can glean valuable insights into the principles of successful investing and the pitfalls to avoid. Success leaves clues, and so does failure. The market is designed to test your emotional resilience. It will throw curveballs at you, triggering feelings of fear, greed, and panic. If you allow these emotions to dictate your investment decisions, you're putting your money at significant risk. Therefore, it's crucial to establish clear rules and stick to your investment plan, regardless of market fluctuations. Don't let sensational headlines or the latest social media frenzy influence your choices. Maintain a calm and rational approach, like enjoying ice cream on a relaxing Sunday afternoon. The market is a master of emotional manipulation. It will constantly challenge your resolve, tempting you with the allure of quick gains and scaring you with the threat of sudden losses. Fear, greed, and panic are powerful forces that can derail even the most well-intentioned investment strategies. To protect your money, you must establish a set of rules and adhere to your investment plan with unwavering discipline. Resist the urge to react impulsively to sensational headlines or the latest social media hype. Cultivate a sense of calm and detachment, like savoring a scoop of ice cream on a lazy Sunday. In today's digital age, there's a plethora of tools and resources available to help you manage your investments more effectively. Take advantage of these resources. Use the apps to track your portfolio's performance, monitor market trends, and execute trades. Use spreadsheets to organize your financial data, analyze your investment returns, and plan for your future. Knowledge is undoubtedly powerful, but the right tools can amplify its impact. From sophisticated investment trackers to user-friendly robo-advisors, there's a wealth of help out there to guide you on your investment journey. Leverage the power of technology to streamline your investment process and gain a deeper understanding of your financial situation. Use the various apps available to monitor your portfolio's performance, track your expenses, and stay informed about market developments. Supplement these apps with the analytical capabilities of spreadsheets, which allow you to organize your financial data, analyze your investment returns, and project your future financial needs. Knowledge is a valuable asset, but the right tools can significantly enhance your ability to make informed investment decisions. From advanced investment trackers that provide real-time insights to automated robo-advisors that offer personalized guidance, there's a wide range of resources available to support you on your investment journey. The financial world is in a constant state of flux, with new trends, regulations, and investment opportunities emerging all the time. To stay ahead of the curve and make informed decisions, it's essential to stay updated on the latest developments. Follow reliable sources of financial information, such as reputable news organizations, established financial publications, and respected market analysts. Read news articles, listen to podcasts, and watch informative channels like this one. The more you learn about the world of finance, the more you empower yourself to make smart investment choices, and ultimately, the more you earn. It's that simple. The financial landscape is constantly evolving, presenting both challenges and opportunities for investors. To navigate this dynamic environment successfully, it's crucial to remain informed and adaptable. Stay updated on the latest market trends, economic indicators, and regulatory changes by following reliable sources of financial information. This includes reputable news organizations, established financial publications, and respected market analysts. Engage with various media formats, such as reading news articles, listening to informative podcasts, and watching educational channels like this one. Remember, continuous learning is the key to unlocking your full earning potential in the world of finance. The more you learn, the more you earn. It's that simple. There you have it, 12 important things to look out for before investing. Let's do a quick recap. Know your why, understand the risk, do your homework, spot red flags, diversify, start small, timing is key, watch the fees, learn from others, control your emotions, use the tools, stay informed. If this video helped you, give it a thumbs up. Don't forget to subscribe for more practical, honest, and no jargon money tips. Until next time, invest smart, stay sharp, and protect your pocket.